Greetings to all our valued clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, Market Analyst of GKFXPrime. I'm gonna share my daily analysis for Wednesday, 9th of August in this video. So first of all, let's review the major market movement. The first instruments we are referring to the dollar index, which measure the greenback strength against a trade weight basket of 6 major currencies. So it was traded higher against a basket of global currencies on Tuesday, rose by 0.33% to 93.63 after data showing US job openings soared to a record high in June. So the dollars struck off the earlier weakness to hit nearly 2 weeks highs after the US job openings. A measure of labor demand increased 461,000 to a seasonally adjusted 6.2 million, which is the highest level since the series started in December 2000. So this is according to the Labor Department said on Tuesday. So the bullish labor report reinforced the narrative of a solid US labor market following Friday's better than expected non-farm payrolls report, pointing to a stronger US economy and bolstering the case of Federal Reserve to raise rates later this year. So based on St. Louis Federal Reserve President James Bullard suggested, however, that low interest rates are likely to remain appropriate over the near term. And the inflation data later in the week, however, is expected to dominate move in the US dollars, with producer price index and the consumer price index data due Thursday and Friday respectively. While in the wake of rebound in the dollars, both the euro and sterling gave back some of their recent gains, with the latter falling for a second straight day, with the pair EUR/USD lost 0.58% to 1.1740. As for the pound, the pair GBP/USD fell by 0.44% to 1.2978, which is its first time in nearly 2 weeks. Sterling has fallen below 1.3 against the greenback amid a drop in investors' expectations the Bank of England will tighten monetary policy. Having a tad in commodities markets, gold price was edged lower on Tuesday, fell $3.04 or 0.23% to $1,261.74 a troy ounce. So it was pressured by a rebound in the dollars after US job openings top forecast and pointing to an improving labor market, lifting the expectations the Federal Reserve will keep to its plan to raise rates at least once more this year. So the gold struggled to hold on to gains as the dollar hit a nearly 2-week highs after US job openings. A measure of labor demand increased 461,000 to a seasonally adjusted 6.2 million, which is the highest level since the series started in December 2000. This is according to the Labor Department said on Tuesday. So the losses in the precious metal were limited, however, as some Federal Reserve members suggested that the slowdown in inflation will continue to weigh on the Federal Reserve's ability to raise rates even if the US job market continues to improve. So the producer price index and the consumer price index data due Thursday and Friday is expected to provide market participants with fresh insight into the pace of inflation. So the slowdown in inflation has weighed on the prospect of rate hikes later this year, pressuring both the dollars and bond yield while boosting demand for the precious metals. And gold price is sensitive to move in the US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, the crude price settled lower on Tuesday, fell 22 cents to settle at $49.17 as rising output from major oil producers offsets reports that Saudi Arabia is planning to cut exports to Asia next month. So Saudi Arabia, the world's largest producers of crude oil, is expected to cut sales of oil supplies to Asia by up to 10% in September to stem the global crude glut, according to multiple reports on Tuesday. So after an initial move higher, crude futures reverse gains on growing doubt a two-day meeting of OPEC and non-OPEC on compliance, which concludes on Tuesday, would yield tangible results. So Gaudians, an analyst at SCI International, stated the reality is OPEC has no way of enforcing the production caps that has been the problem of the cartels for many years now. So in May, OPEC and non-OPEC members agreed to extend production cuts for a period of 9 months until March, but stuck to production cuts of 1.8 million barrels per day agreed in November last year. According to a research analyst at FXTM, Lukman Otunugal stated, the product cuts agreement will be a risk of falling apart should OPEC's levels of compliance continue to waver. He added, the bearish bias towards oil remains intact amidst oversupply concerns, and there is a risk of the OPEC deal falling apart before March 2018 if members do not see oil price recover. Also adding to concerns over the glut in supplies, where reports Libya, largest oil fields, was returning to normal after a brief disruptions by armed protesters in the coastal city of Zawiya, the National Oil Corporation said on Monday. So this was the second straight day of falling crude price ahead of US crude oil inventory data from the American Petroleum Institute later Tuesday, as well as a further report from EIA late Wednesday. So analysts forecast crude oil inventories fell by 2.7 million barrels in the week ended August 4th, the sixth straight week of decline. So now we're gonna review the highlighted economic data and events which released on yesterday as well as for today. So yesterday there is no any important economic data released, but as for today, China was released the consumer price index for July on the morning 9:30, and it was at 1.4% growth, which is slightly slower than the expectations of 1.5%. So later tonight we can focus on the crude oil inventory, which will be released by the APIs of United States, okay, and it is expected to decrease to draw more than the previous, with negative 2,200k compared to previous negative 1,527k. And now we're gonna take a look for the technical analysis, and first instruments we are looking at GBP USD in 1 hourly charts. So the pound traded against the US dollar remain in an uptrend, but currently is still retracing. So a closures below 1.29300 is signals for shifting in trend directions to become downtrends. So the next target we could refer to 1.28500. Otherwise, a price closures above 1.30000 suggested to continue the current uptrends, and the target we can refer to 1.31000. While the pair EUR-USD in 4 hourly charts remain traded in an uptrend, but it seems like losing momentum, so it is expected to be ranging between 1.17300 and 1.18200 for short terms. So a price closures below 1.17100 is a signal for it to retrace more towards the next target of support level at 1.16100. And referring to the indicators, the both moving average lines is almost formed depth cross above, and MACD as well. The both movement line is pointing downward now and expanding. The momentum is stood at the level below of 0 as well. So these are the signals for the pair to move further lower after the price closed below 1.17100. As for the Kiwi, it was remain traded in a downtrend, okay, after the both moving average lines form a depth cross above, and the MACD, referring to the MACD, the both movement line now is almost shifting its directions to pointing upwards again. So the downward momentum is decreasing as well. So in short term, it is expected to be moved slightly higher, but after a price closure below 0.73000 is a signal for it to move further lower towards the next target of support level at 0.72800. As for the Aussie, it is remain traded in an uptrend as well, but currently is retracing, so a price closure below 0.78500 is a signal for it to retrace more and fall towards the next target of support level at 0.78200. While the Japanese yen, it is traded in an downtrend, so it seems like losing momentum, so it is expected to be ranging between 109.900 and 110.900 for short terms. So currently the price was closed out of the range and below 109.700, so it is suggested for it to continue its downtrend and fall further towards the next target of support level at 109.000. I'm referring to the indicator of MACD. The both movement line is pointing downward and expanding now, and the downward momentum is strong, so these are the signals for the pair to move further lower. For commodities markets, gold price traded in an uptrend but seems like losing momentum, and it is expected to be ranging between 1256.00 and 1273.00 for short terms, so price closures above 1274.00 suggested to continue its uptrend and move further towards the next target of resistance level at 1295.00. Currently the price is moving higher, okay, so the first resistance level we can refer to 1273.9, which is the previous highs located. So the next target will be at 1295.00 after the price closure above 1273.90. As for the oil price, the West Texas Intermediate price traded in an uptrend, expected to be ranging between $48.60 and $49.80 for short terms. So a price closure out of the range signals for it to move further towards the directions, and the next resistance level we can refer to $50.40 and support levels refer to $47.20. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.